Welcome everyone to the Real Estate Experience Podcast. Super excited as always to have you on these, where we go into the tools, the tactics, the mindset, which I believe is even more important, what it takes to really make it in this industry. And I bring on other high achieving investors to really provide their experience, shares, and insights. Those of you on the YouTube, you know the next steps, hit that subscribe button and also notification bell. And everyone on all the other listening platforms, leave that rating. It would really mean the world. So today we've got Brian Hamrick on the podcast. Welcome, Brian.
Hey, Sterling. It's great to be here. I've had you on my show a couple of times, and I finally made it to your show. So I'm very excited to be here.
All right. So looking forward to Brian dropping absolute golden gems. And just a little bit about Brian himself is his company is Hamrick Investment Group. Assets under management is just over $32 million. And he's got his hands in multiple different sectors. He's in self-storage. He's in office. Offline, we talked about a development project he's working through and some residential. And just a fun fact for you all, and we'll get into it at a later point, is he is an amateur ghost hunter. Yes, amateur ghost hunter. Very excited about unpacking that. So, Brian, could you give everyone just your 1% of your life's journey that has really shaped you to where you are now and how you got into real estate?
Sure, Sterling. First of all, thanks for having me on your show. So my life's journey, you know, I live in Grand Rapids, Michigan. I was in the film marketing business for about 20 years. And in fact, if you're watching on YouTube, you can see the Remember the Titans poster over my shoulder. I worked on that movie trailer. It's one of my favorite movies. But at a certain point, probably around the time I turned 30, which was way long ago, I realized, you know what? I know nothing about finances. I mean, I'm making good money doing what I'm doing, and I should probably start figuring out how to invest and secure a future for myself. So that got me into real estate. You know, Robert Kiyosaki, Rich Dad. I saw Robert Allen speak live, and that got me really motivated. Just started going down that journey of reading books, listening to speakers, paying for training, coaching.
And about what age was this where you were really getting into the Robert Allens, reading the Rich Dad, Poor Dad?
Early 30s.
Okay,
yeah. In fact, you know, until I reached 30, I really didn't even know what a mutual fund was. So I had a lot of learning to do, and I just soaked it up like a sponge. You know, I realized, hey, I love the job that I had at that point. You know, making movie trailers, working in movie marketing. It was a fun, creative, exciting job, but I also knew in the back of my mind, this is not something that I want to spend the rest of my life doing. And I just started laying that groundwork and taking training, paying for coaching, paying for, you know, back then we didn't have podcasts. Yeah. And if we did, I didn't have an iPhone to access them. I mean, the iPhone's only been around, 15, 16 years. I'm talking, you know, at least 20 years ago.
What was the modern tech, VCRs or, I mean, or am I dating
Morse
back way
code?
too far?
We communicated by Morse code. No, cassette tapes. So I don't know if you remember Nightingale Conant, but I would buy their, you know, self-help motivational cassette tape packages, and I'd listen to them in the cassette player in my car. That's how I never read Rich Dad, Poor Dad. I listened to the cassette tape from Nightingale Conant. It was Rich Dad's Secret. That was the name of the program, but it was the exact same thing. And just soaking it up, and then realizing, okay, let's start buying. And that one thing led to another. I started in a single family, started buying multifamily, eventually started syndicating larger apartments, and then branching out into self-storage, office, performing and non-performing notes.
Got it. So I do want to take a step back. Were you able to meet Denzel Washington?
I did not meet. No, I wish I had. You know, that's one of the things that the movie marketing is very separate from the actual filmmaking. So we come in after the film's been shot or it's being shot, but very rarely do we get to interact with the actors or the filmmakers.
Got it.
And the few times I did, it was exciting. But boy, I wish I'd met Denzel Washington. Yeah. I saw him. I went to the premiere of Remember the Titans.
Was he actually there? Okay, we're going off a little.
Yeah, okay, yeah, he was there. He was there, but you know, he was far, far away. I just got to see him
And we're mentioning that for everyone because he was involved on Remember the Titans, as we mentioned earlier, in which Denzel Washington does play in that, for those of you who haven't watched the movie. And I love how you talk about mindset. Earl Nightingale was one of the first individuals that I came across when I changed a complete different trajectory in my life. And I listened to his CDs, and I listened to them so many times that it got to a point to where I scratched them. But he's got the very unique voice. And I believe we mentioned this on your podcast too, Brian, in terms of this story of Earl Nightingale being like the pivotal in terms of mindset. And from my understanding, he's the one that pioneered listening while learning what we know today as audiobooks, correct?
Yeah, I mean, I think you're right. I know that he was definitely one of the early ones. You had Zig Ziglar and some of the other pioneers.
Jim Rohn.
Yeah. Oh, yeah. All those guys. And, even before I got into real estate, I was listening to those tapes, How to Win Friends and Influence People, read that book multiple times. So mindset wise, I was always learning even before I got into real estate. And I think that helped me in my first career, which was movie marketing, just having the right mindset to excel and do the best job I possibly could, while overcoming those personal, those limiting beliefs.
And where did you get that from, Brian? Because most people don't have that going in. Did you have parents that said, hey, you need to focus on mindset? Was there a pivotal moment that happened and then you came across someone and then it snowballed from there?
Yeah, I think, it probably did start with my parents. My dad had How to Win Friends and Influence People laying around the house. And I just happened to pick it up one day and started reading it. And you know what? It's a great read. It's something that you get sucked into pretty quickly. And you're like, oh yeah, I like that. and then that led to the other ones, How to Stop Worrying and Start Living, which is same author, Dale Carnegie. So I got that from my parents, and then it just sort of took it into myself, and that sort of helped me from an early on, believe, hey, I can accomplish great things, and as long as I set out to do them, and I want to do them.
And so, how did you make that jump from filmmaker to real estate? Was it you just completely took action? Did you find people to partner with, the coaching? How did that look, and how did you make that transition?
Yeah, so it was kind of stops and starts. I mean, when I first heard Robert Allen speak live about his wealth academy, I forget what it was, but it was some sort of wealth academy. The next day I quit my job.
And did you see an infomercial and then?
No, I saw him live. So I lived in Los Angeles, and we had something called the Learning Annex. Where you could go, like I saw Robert Kiyosaki speak at the Learning Annex. These are just, it's kind of like taking a class on a Wednesday evening at 6 p.m. You go and you hear a speaker. I just happened to hear Robert Allen. He got me so pumped up. He's like, come to the back of the room and, raise your hand and give me $5,000. I was the first in line. And then I quit my job the next day, and then I realized, that was probably a mistake. So I came back.
Well, it worked out just fine. I mean,
eventually it worked out. But like I said, stops and starts. So I started laying the groundwork, reading the books, listening to the materials, soaking up as much as I possibly could. And there was just not nearly as much material and product as there is now to learn this stuff. So I really had to search and find it, and pay a lot for it too. Now what you get for free, you used to have to pay $5,000, $10,000 for.
Yeah.
So anyway, I found a network in Los Angeles that was buying single families around the country. Actually, they had a network of brokers around the country. So I just started buying single families in like New Mexico, Fayetteville, North Carolina.
And was this your own money that you're leveraging, investors? Or?
Exactly. And these were, some of them were VA foreclosures where you just needed a couple $1,000s down. Some of them, this was back before pre-recession. So there were all kinds of crazy loans where you could put $1,000 to $10,000 down.
So was this 2000s, 2005, 2006?
Yeah, this would have been 2002, 2003, right in there. And, and on paper, they were supposed to cash flow. Some of them did in reality, some of them didn't. The whole thing to me was kind of a wash. It was a great experience. It got the ball rolling. But I realized pretty quickly single family is not the way I want to go to secure my future. And that's when I started studying multifamily. Why not get into multifamily, have that economy of scale, efficiency of scale, all that. But here's the thing. I was living in Los Angeles, literally watching the asset bubble grow, that real estate bubble grow. To the point where in 2005, I said to my wife, we have to sell our condo and get out of here because the market is about to implode.
So you saw that coming?
Yes.
Okay.
Yes. I thought it would be more of a interest rate problem, like the interest rates would shoot sky high. But I also saw that, hey, there's just way too many people overbidding for this inventory. And you could just, and when I say I literally saw it growing, you could see them building all new subdivisions, way outside, like an hour outside of Los Angeles, just the same house everywhere. And you could just see it. So we moved from Los Angeles to Grand Rapids, Michigan. And I just waited for that bubble to burst, which it started to burst in 2007, 2008. And in 2008, it was a buyer's market. I bought my first 12 unit. Then I bought a 4 unit. Then I bought a 37 unit. Then I bought a 2 unit and just kept going.
And I want to digest, well, before I want to go into that 12 unit, we'll park that. But in terms of your journey where you were at just first starting out, what was a failure that you encountered that later set you up for success, or maybe a learning lesson or a failure you saw from someone else and you took that and actually avoided that set you up for success?
Well, I think that I saw people setting themselves up for failure by assuming that appreciation was just going to keep skyrocketing. And, this is the new normal. Prices will only continue to go up. And I avoided that failure by just saying, you know what, I'm going to wait. I'm going to wait and see if you're right. If you're right, great, good for you. I missed the boat. But if you're wrong, then I'm going to come in and I'm going to buy those properties at a discount because you're not going to be able to afford them anymore. So I just waited. And as far as, failures that I experienced early on, I'd say some of those single families that I bought were failures. I could go into long stories about, about some of the problems I had with some of those. Managing remotely. I mean, I did have management companies in the area, but when they came to me through this real estate network that I had been part of in LA, and some of them were just terrible. So some of those first single family investments were real failures.
And you had mentioned about they look good on paper. So were these D class, C class, older built? And
no, these were like 80s, 90s type build, good neighborhoods, good areas. I think the problem was that I was just looking at a very rudimentary APOD. The income is going to be this each month. Here's your expenses. Here's your profit. Here's your cash flow that you get to put in your pocket. Not really taking into account having to evict someone, having
vacancy, repairs and maintenance.
Exactly.
Thanks, and I appreciate you going into that, because that's one thing that I speak to individuals and I communicate to mentee students or whoever's getting into the industry. Know your numbers. When someone sends over their breakdown, I say, are you just expecting for a tenant to live in there for forever? I mean, you've got to consider that vacancy, and then also repairs and maintenance. There is CapEx too, especially if it's an older property. So I do appreciate you going into that. And then you mentioned about the waiting. Should people be waiting right now for a possible correction to happen and then it shift to a buyer's market? What are your thoughts on that?
Boy, I am not qualified to give that advice. Should you be waiting? I think you should be very careful. I mean, based on what I just told you, I should be waiting right now, based on my past experience, but I'm not. I just bought a building this week, and we're going to tear it down and build a 120 unit apartment complex. Most likely we're in the very early stages of that, but so I'm not waiting. So it'd be hard for me to advise other people to, but I would just say, be very careful, understand the numbers, the real numbers, not the pro forma numbers, and know your area, know the neighborhood you're investing in and the asset class, and make sure that if you're not 100% comfortable with understanding that asset class, you have someone on your team who does.
Got it. And it's more so just where you're at in your cycle as a investor, you know more so how to protect your downside versus someone who's just getting started. Maybe you don't have the know-how exactly to mitigate your risk, and maybe you consider waiting because you may be banking more on the appreciation play.
Yeah. So the circumstances right now are very different from the Great Recession. There was just really bad, poorly made loans that had happened, and people were way over leveraging. There was also an excess of supply of housing. It's very different now. The banks have been very careful over the past 10 years. So I don't think there is that over leveraging that we're seeing in most cases. Interest rates are super low, all-time low. So you got to take that. I mean, if you wait, you're going to lose. There's that interest rate risk. So You got to take that into account. And the other thing is, and this is why I'm still very bullish on residential, is that the supply has not kept up with the demand. And when you project out, the demand is only going to get stronger, and the supply is not going to be able to keep up. So that's why I would not advise people to wait, but I would just say be very careful if you are going to do a deal.
And by residential, you mean multifamily, correct? Apartments or even single family?
Yeah, single family.
Okay.
I mean, there's definitely a lack of single family that's been built, especially affordable single family.
Got it. Because I know, of course, is it 5 units that is considered commercial, but you still have some people that say residential is like, do you mean residential in the single family, or do you mean
Yeah, that's a good distinction. When you're getting a loan, residential is 1 to 4 units. If it's 5 units or more, then it's a commercial loan. When I'm saying residential in this conversation, I'm just thinking of single family homes. I mean, just people who build and buy and live in single family homes. There aren't enough, they're not building them at that $250,000 range nearly as much as they were building them 12 years ago.
Got it. And so you mentioned you made that transition from the residential or the single family to the now multifamily. How did that, for that very first deal, let's take a step back. Did you go through brokers to find that first deal? How'd you find that?
So the first 12 unit, I had a realtor friend of mine who just pulled me a list of multifamily. I said, I want to buy multifamilies. It's 2008. The bubble had burst. It's a buyer's market. It's time to go. So bring me all the multifamilies and let's go take a look. And this was a 12 unit that had been on the market for probably 10 months or longer. No bidders. Nobody paying attention to it. And it was in a great area, historic district, 12 units, charming. It was built by a Civil War veteran, so it was very old. Is
this in Michigan, or are you still looking at Los Angeles?
This is in Grand Rapids, Michigan. It's in the historic district. And I thought, you know what, this is it. Let's buy it. And I way underestimated the money I'd have to put into it. I thought maybe $40,000, ended up being closer to $90,000, but I still own it. And it's one of the gems of my portfolio. So I even though I probably overpaid at the time and under budgeted, it still has, I've gotten through refinances and whatnot, gotten all of my money back out.
Gotcha. And you just used your personal cash on this in terms of, or did you syndicate it?
Yeah. So this one used my own personal cash. Got a loan, 75% loan to value loan. I was still, even though I had moved to Grand Rapids from Los Angeles, I was still working in the film marketing industry. So I was making California money living in Michigan. So for that first one, I was able to come up with the down payment myself.
And did you still have to pay California taxes? Just curious on that.
No.
Oh, wow.
Yeah.
You cannot go wrong with that, especially now how the taxes are going up.
I actually, if maybe I had to pay something toward California, but it was still, the trade-off was very good. I mean, Michigan prices and California wages, that worked out pretty well in my favor.
So at what point did you decide, now I've got the 12 unit to steadily, so someone Knowing what you know now, would you have just skipped the single families, the 12 unit, and just gone to, I wouldn't say the development, but larger to mid-sized multifamily?
Yeah, well, it's a different mindset. It's when you have a 4 unit, a 12 unit, even a 37 unit, which we ended up buying relatively quickly. That's a smaller property and it requires a different managerial style than when you get to a larger 100 unit, 200 unit type of apartment complex that you have to syndicate. So, would I have done it sooner? No, you know what? There's so many great bargains, so many great deals.
Yes.
I should have just picked up more and more of the 12 units, the 10 units, and I would never have had to syndicate. But I reached a point where, okay, I had sort of exhausted that market in my area, and I only invest as far as residential in my area. I realized, okay, now it's time to go bigger. And when I made it's this series of realizations. You realize, okay, I bought the 12 unit, the 37 unit. Now it's time to go bigger. I would not have had that realization right after the 12 unit, because after I bought the 12 unit, it's just like, holy.
So it's just like you're saying a snowball effect of just gradually being able to move up.
Exactly. Yeah. Yeah. And nor should I have gone bigger that quickly. It takes time to get to that place in your life where you realize, okay, now it's time. Let's do it.
Got it. And so I want your thoughts, Brian, in terms of the element of bringing on investors. So do you market through your company, Hamrick Investor Group, or is Brian Hamrick the personal brand? You put yourself out there and put out content. You have your podcast, get investors in through that channel. How do you operate on that side?
Well, I'm a very slow growth investor. So it's not like I'm always out there soliciting for investors. In fact, I have a waiting list of investors who want to invest in some of my deals.
Love that marketing strategy.
Yeah. So I'm not actively promoting myself. And I keep thinking, okay, well, when I get to that point where I have to raise $5 million all at once for this, development or some other project, I need to step up my game. But right now, you're exactly right, Sterling. My brand is myself and Hamrick Investment Group. Now, I do own the website for Next Level Investment Club, which I am considering rebranding myself as Next Level Investment Club. And I've actually spent some money to do that. But because I am not that prolific in the deals that I bring to investors and the deals that I do, I'm kind of on the fence as to whether that's necessary.
Got it. Understood. All right. And so my last question on this is, where do you feel the market is going at this moment? How are your holdings been doing? And do you feel that prices are steadily going to be going up now that some markets so here in Indianapolis, collections has dropped just a tad bit, but nothing too concerning. And I know it's different on other markets, but do you still see sellers' expectations being high as they have been or coming down? Where do you sit on that?
Yeah. So, I don't know when this episode is going to come out, but right now it's mid-October, pre-election. So whatever I say now could be flipped upside down by the time people listen to this.
Well, we're still going to hold you to it.
Yeah. So in my reality bubble, it'll be exactly as I'm about to say. No. Yeah. So we have noticed the same thing. Like as far as delinquencies, they've actually improved during coronavirus. Occupancy. So a lot of my properties are close to that downtown core.
Got it.
In Grand Rapids. And I can see a little slippage in occupancy because one of the trends, and if you listen to CoStar or Marcus and Millichap, they'll tell you that the trend is people are moving out of the downtown core and they're moving to the suburbs. So the apartments that I have that are more in the suburbs are doing great. The apartments that I have near the downtown area are still doing okay. But whereas before our occupancy was 96, 97%. Now we're more like 93, 94%.
Got it. And I am curious, is it more of my generation? I'm 29 years old, going to be, October 31st, now 30. But from that, is it my generation now getting older, having kids and moving out to the suburbs? Is that the main root of that?
Would you be Generation Z or Generation Y? Millennial. Are you a millennial?
I'm millennial.
Okay, you're a millennial. Okay. Yeah. So I think that's part of it. I think part of it is, and this is a trend that was happening before coronavirus, from what I understand. But it's just accelerated because of coronavirus. One of the main factors is people are saying, well, why are we paying the extra cost of living downtown when everything's shut down? You can't go to the restaurants. We're not even going into the office anymore. I could get a better lifestyle at a better price.
Some offices are even shut down too, in terms of they have now gone to remote. So that's something also.
Exactly. And you're seeing this very much in like New York City, Chicago. People who are like, well, you live in Chicago or New York City, so you can enjoy that downtown lifestyle. Well, that lifestyle isn't happening right now. Wow. So why am I paying for it? So that's part of what's accelerating that trend. I think you're very right in that people are like yourselves are having families and saying, do I want to live downtown where it's a little harder to raise a family, get around in my car,
the schools too. Suburb schools too.
Exactly. So I think that's part of it. And I also just think pricing is part of it too. It's gotten so expensive. Housing has gotten so expensive, especially in that downtown core area, that people are forced to move out because wages aren't keeping up with expenses. And that's something as residential apartment owners, we have to realize and keep an eye on is where are wages? Are residents making enough money to actually live here?
Got it. Well, thanks so much for dropping those bombs on that one. And now we're going to shift to the rapid fire sharing round. The first question is, how does someone get into ghost hunting? I am curious on that.
Well, so I host the podcast, Rental Property Owner and Real Estate Investor Podcast. And I love, 3 years ago, I did a Halloween episode where I was just, I'd have a conversation with someone like yourself. And at the end of the conversation, I wouldn't even put this in the show, but I'd say, hey, I'm doing a Halloween episode. Do you have any ghost stories? And I did an episode 3 years ago with some really cool ghost stories that some of my guests had shared with me. This year, I found a retired reverend who has spent his entire life, he grew up in a haunted house.
Oh,
and now he's got these, and I don't want to go into too much detail, but he had a near-death experience. If you ever saw the movie The Sixth Sense, he kind of has that going on too. And he came over to my home studio and we recorded an episode. He brought 2 of his research assistants with him, and they said, hey, do you want to go with us on our next ghost hunting?
I'm just getting cold chills right now, just thinking of, and you're explaining this. I'm like, no, I do not.
Yeah. So this is my real estate investing podcast. And this has nothing to do with real estate. And I'm like trying to bend it around because we're going to houses, we're going to businesses that are haunted. And these are things that happen. These are real things, whether you believe it or not. These are real things that are happening in places, businesses, restaurants, hotels, people's homes. And it's never quite happened to me in a way that I can say, oh yeah, I saw a ghost walk in front of me.
That's what I was just going to ask you.
Yeah, but I did have an experience. I went with them to this haunted house and we had a very bizarre experience. And I'm not going to tell you because I want people to listen to the show. Listen to episode 251 of the Rental Property Owner and Real Estate Investor Podcast. I'm bringing it out next week just before Halloween. And you'll find out what happened, and you'll hear the stories from the Reverend and his crew, and some of them are like terrifying.
All right, well, we will keep it there and have everyone in suspense. Yeah, the whole all right.
That's how you get into ghost hunting. You host a real estate podcast.
Yes, definitely segues to that. So, what is one common myth in the multifamily sector that you hear that you can debunk?
One common myth in the multifamily sector that I can debunk, one of the myths that some people have is like, well, what are your qualifications? What's your certifications to do this? And the truth is, I didn't go to Harvard or Yale and get some sort of real estate economics degree. People from every spectrum of life and education can do what we're doing. Mm-hmm. You just have to take the time to learn it, get the right training, the coaching, whatever it takes, listen to the right podcasts like yours, Sterling, and then do it. Partner with people if you have to, but just do it. You don't need to be qualified. You don't need to be certified. You don't need those letters in front of your name.
Got it. And another one, and normally we would ask this previously, is the chicken and the egg, meaning that when you're working with the broker, they want to see that you've closed deals, but you're looking to get your first deal and go through a broker. How does someone work through that?
You have to know what your value is and partner with someone who brings that piece that the broker's looking for. You got to partner, or you do it the way I did, which is just build it up slowly. Start with a single family, start with a smaller multifamily. You know, when I bought my 12 unit, the banks didn't say, well, tell us what else you own. They were just thrilled someone wanted to buy this property, because I think it was some sort of short sale maybe, or whatever. But, and then once I built up a portfolio of these smaller multifamilies, it was just the next logical thing to switch over to a larger apartment complex. And I didn't really get that resistance, but it took me 5, 6, 7 years to get to that point. The quick way is partner with someone and bring some value to that person.
Well, there you go. And last but not least is, why do you believe we're here on this planet, on Earth, Brian?
So I believe we're here on this earth to we are here to find creative solutions to improve our product and enhance our customer service and relations. So if you think of like how we started as kind of a hunter-gatherer society, and we had to protect ourselves from saber-toothed tigers, so we needed technology like spears and things that, to protect ourselves. And eventually we became an agrarian society where we planted crops and learned how to feed ourselves. And I think life is just a process of finding better ways, better solutions to improve our lives and other people's lives, and at the same time, improve our relationships with people.
Got it. Definitely appreciate that on that, Brian. So officially, everyone, thanks so much for being on the Real Estate Experience. As I mentioned at the beginning and on an ongoing basis, is those of you on the YouTube, hit that subscribe button and notification bell, and also comment below. Would love to hear from you all and your biggest takeaways from this episode with Brian, because I'm a firm believer that learning from others, yes, you can make your own mistakes, but it's even better to learn from others and just replicate what they're doing. So thanks so much for being on the podcast, Brian.
It was a pleasure, Sterling. Thanks for having me.
All right. Appreciate it. Thanks for listening to the Real Estate Experience. If this has brought you any value, please subscribe and leave a 5-star rating. It would mean the world to me. Now go out there and crush it.